Hello and good morning. I welcome you to the morning meeting today on Friday, the 13th of April 2018. This is Jens Klatt speaking, exclusively presenting this format to you for JFD Brokers as the Global Head of Research and Education. I want to guide you through the upcoming minutes here with an update on where the market is heading, especially European equity markets, in our case, especially the DAX, which has taken on some serious momentum now and is targeting 12,500 points. And if we are breaking above that level, I think we have a very, very solid, very good chance to see a quite green close of the week, weekly close there. So in fact, it was the momentum here was brought up yesterday with a tweet from Donald Trump, which I want to show you here. 1 second. So here, first of all, the risk disclaimer: JFD Brokers offers exclusively consultancy-free services. Content of this webinar does not constitute investment advice or investment recommendation and should not be considered as such, and does not in any way constitute an invitation to acquire any financial instruments or products. And then let's have a look here at this quite strong move in the DAX. And again, from a technical perspective here, you can see that this is a quite crucial region. The DAX is right now attacking and trying to break the region around 12,450, 12,500 points. Target above that can be found around here, this high from the last week of February, around 12,600 points. And now, and this is the thing, let's have a look here at the price action from yesterday. And that was here in the afternoon. That was shortly after our morning meeting yesterday that the DAX started to take off after a very choppy opening into the trading day, and then took on some serious momentum till the US markets opened, and then we stabilized with some further momentum in the morning then already here. And right now we are fighting with the intraday highs around 12,470, 480 points. And if we make it above that, again, 500, obviously those 15 points do not matter. But if we make it above that, then further room is given. And now the question comes up, where did this push yesterday come from? And I think there's a very interesting development which I want to share with you here. So this is a chart I prepared for a research piece, a weekly research piece for the DAX, which I will publish here very shortly. And it's for the upcoming week. And what I do is that I have a look here at the open interest at the Eurex. We are looking here at short calls. And next week on Friday, there is a small expiration at the Eurex here. And even though it's probably not that significant, there is at least some chance that the price action from yesterday, but also the upcoming price action, is driven by this small expiration. And so in fact, even though you probably have difficulties here to read these German definitions, even though it's quite easy. It's Eröffnung is open, for example. Tageshoch is high, Tagestief is low. Letzter Preis is last price. But we are looking here at the strike price. And this is something I don't need to translate here, as I don't need to interpret the one here on the right, open interest. So you have 12,400 points here, and you see that this is gehandelte Kontrakte, so traded contracts here, traded volume on this day when this snapshot was made, and then here the open interest. So what I think is really important to note here, even though this is not part of my my weekly analysis, but it perfectly explains, in my opinion, why the market took on serious momentum here yesterday. So I took this snapshot here at the Eurex on the web page there. It's completely open and for free, available for everyone. I took the snapshot yesterday to prepare already my thoughts, to write something down already, and find some structure, some ideas here on my weekly piece for next week, then for the DAX. And what I came across was the following here, that when I took the snapshot yesterday, it was based on the price action of the day before. So you get this with a 1 day delay, and the data here is from the last price at the day before. And we know that Euros, the FX there is trading between 6 to 8 p.m., 6 a.m. till 6 p.m. GMT. No, 1 second, is it right? 6 p.m. till 8. 6 a.m. till 8 p.m. GMT. And so this snapshot here is based on the price action from the day before. So yesterday was Thursday, so it was the price action on Wednesday. And there the question arises then, okay, traded contracts on Wednesday was here, obviously 12,400. And now something interesting happens. Yesterday, Donald Trump comes up here at around 10 p.m. 10 a.m. GMT. Never said when an attack on Syria would take place. Could be very soon or not so soon at all. Which is obviously suggesting that there was a quite aggressive rhetoric here, even though probably Trump did not mean it the way he said it, and probably there won't be any attacks on Syria here from the U.S. in the next days here. And the interesting thing is that when this tweet was shot from Trump yesterday, those market participants who obviously shorted the DAX to some extent, or at least say that they don't expect the DAX to trade above 12,400 points next week, Friday at 11 a.m. GMT, they're obviously caught on the wrong foot here. And then they have to start to hedge, even though in fact it wasn't that bad for them, because when the DAX started its rally here, we were trading around 12,300 points, but the market took on serious momentum, headed higher, and even here in this current market environment, very choppy environment in the afternoon, probably some first hedges took place, but they obviously or probably start to hedge right now, especially if the market now will push above 12,500 points. This is the latest point, I think, where some hedging action then will take place. And based on that, serious momentum could be expected on the upside, because those hedgers have to buy the FTX here in this case. And here, then the next regions around 12,500, but also 12,600 points come into play. It's not that they were the most traded levels here on Wednesday. Nevertheless, you can see here in the column open interest that we have quite a high open interest here. And if all this exposure is hedged, or at least to some extent, I think in a thin market environment in which we are currently trading, chances are highly given, and especially now when looking at the price action here in the DAX, respectively at the significance of those levels, that with a break above these levels, a natural short squeeze could happen. And if this happens, then the momentum should be definitely expected on the upside in the DAX. And this is exactly what I'm currently looking at here, and why I definitely favor, from a risk reward perspective, long engagements over short engagements, because I think that there's currently pressure building, and the moment here this resistance breaks, I think further momentum should be expected, and we can easily make another 100 to 150 points on the upside into the weekly close. So it could be that we are about to see quite green close in the DAX here. And again, from a risk reward perspective, I think long engagements should be definitely favored currently above short ones. Now the problem is, you might wonder, okay, how to trade this? The problem is that unfortunately it seems as if we're a little late, because we started already with a break here in the pre-market phase. So that was before Xetra spot market trading open. We already pushed above the highs from yesterday, and then saw a retest shortly after this spot open here, and traded back towards these highs, respectively towards the 50 exponential moving average here on a 5-minute time frame, which is not just a trend indicator, but also something we have seen here. Trending markets, very solid support but also resistance line, depending on whether we're trading above or below that. And so that could probably be the last opportunity here to catch a train here on the upside if such a squeeze now happens. Sure, you could think about trading a direct break to new daily highs here with a very tight stop, let's say here below this consolidation area, even though I'm not sure whether this is not it's probably not a too tight stop in this context. So hopefully you got the chance and you got lucky enough to be on the long side. If this break really happens, then I think it could get really troublesome to catch a trade here with a good risk reward on the upside. And yeah, that's a little unfortunate here. Nevertheless, I look forward to your ideas. If anyone has an idea, please shoot me a tweet or something like that, and we can definitely discuss that. I'd really appreciate to see your thoughts here and what you think, and how to trade such a scenario here from the long side with an attractive risk reward. So yeah, let's have a look here at the currency markets, which are unfortunately very, very boring compared to the DAX right now, which has some promising, interesting signs. Especially, I'm not sure if this will play out, but I think it's way more interesting as what we get to see in the currency markets right now. Euro USD is just, yeah, it's nothing. It's nothing. So I'm not sure if we should make the euro here a topic at all. Probably it makes definitely more sense than to focus here on GBP USD. Some might remember, some of those who followed me yesterday on FX Street, there was a webinar where someone from the audience asked me what I think on pound sterling USD, and I said that I consider the region here around 42.50, 42.70 be very, very interesting, very, very promising. If we break above that we have a good chance to see a squeeze, which could easily bring us up to the highs here from 2018 so far, 143.50, around 143.30, this region here. And now the question arose during the German version of the morning meeting. What's the reason for that? What's the reason for current pound sterling strength? And it's in fact very, very difficult to say, because there's no external driver. So the economic calendar is very, very thin this week. This is definitely not the reason, not the driver for this breakout here. Probably, and this is the thing, probably it has something to do with this quite significant break in Euro GBP. And what we get to see here is, let's call it the cross rate reaction. So in Euro GBP, we made this region around 87.50 a very, very big topic over the last weeks, probably months. So several times people ask about Euro GBP, and I said that this region here is very, very interesting. And we've seen some very choppy price action over time now, and now it seems as if the break really occurs here, and this is the real deal. And now we are about to see further losses down towards 83.30, this region around the lows from last week. Last year in May, I think it was in May, correct? Yeah, at the end of April, respectively here, in May, at the beginning of May then. So it could be that with the choppy price action in Euro USD, pound sterling to the US dollar broke out on the upside due to this break in Euro GBP here on the downside. Because to hold this and not make it possible to do arbitrage trades here, it's necessary that if Euro GBP breaks lower here, the GBP USD has to break higher if Euro USD is stable. Simple as that, right? And so the break occurred finally, and it seems it's not just that it seems, but it's a very significant break. And the target here is around 83. Seems not today, but in the upcoming months, let's say. It's a very volatile currency pair. Euro GBP is not known to be highly volatile, and so that's it around the currency markets, the current price action there. Gold is still very choppy. We thought on Wednesday. There we go. Now the break will happen, 360, 365. Instead, we sold off again. So it was only a short attempt, probably some stop fishing taking place here. And now we're selling off into the range again. Nevertheless, I think we still have a solid chance that rather soon or later there will be a quite aggressive attempt to break this very crucial resistance zone here on the upside, and this will result in some further significant bullish action then on the upside. Dollar Japanese yen probably is about to see quite interesting close out of this week, depending on, I mean, it's also very technical right here because the economic calendar is very thin, but we are about to see an attack around 107.50 to 108 on the upside. If we make it above that level, there's further room given up to 110 to 110.50. And so that could be a quite significant bullish break, which could happen here over time. And it's probably is about to come, even though it looks promising so far. We still have to be patient a little. Nevertheless, some aggressive traders might say, I at least give it a try and try to anticipate the break. Therefore, it would be, let's say, helpful if we dig a little deeper here and make it towards these highs around 107.45 to 107.50 around on a 50-minute time frame. I'd probably give it a try with a long engagement against this level, with a stop then here below 107.10, 107.05, and then try to anticipate from here, from such an entry long, try to anticipate a break on the upside of 107.80 to 108 around, and then hopefully see some further momentum taking on that. With again, and there, let's close the cycle with a tweet from Trump. It somehow seems as if there is some de-escalation around the corner, and this could then drive prices higher in dollar Japanese yen, based on the fact that we know that Japanese yen is usually a currency which is used as a funding currency for carry trades. So if risk aversion, nervousness is now going out of the markets, chances increase that there could be some serious momentum then on the upside in dollar Japanese yen in this case, so that the Japanese yen is offered again into the weekly close, respectively, into such an de-escalation phase, let's call it. So that's it from mine. I wish you all the best. Happy trading. Watch your stops. All the best for the last hours of trading into the weekly close, and have a good weekend. Yes, enjoy yourself. Talk to you again on Monday, 9:30 a.m. GMT with the morning meeting. All the best. Happy trading. Take care. See you, and bye-bye.